Hey everybody, welcome to Mortgage Today for Monday, April 15th, 2024, and oh, what a day it was, and it really was. UMBS were down 42 basis points by mid-morning. Retail sales came in at up 0.7 on a 0.3 forecast. Last month was revised up to 0.9 from 0.6. The results say it all when it comes to retail sales. A big 0.40 beat and a nearly as big 0.3 upgrade to last month. Bonds were already weaker in the overnight session and lost ground immediately. Where were they spending money? Going out to eat for the most part, as food and drinking establishments were up 6% on a year-over-year basis. Also on non-store retailers like Amazon Prime. Where are they not spending money? Anything home related, building materials, furniture, electronics, appliances were all down on a year-over-year basis. The other big news of the day is some sad news that Iran launched an estimated 300 missiles and armed drones at Israel in the first direct strike against Israel from Iranian territory. Israel, the UK, US, and France intercepted about 99% of the projectiles, as we were given about 3 days notice it was going to be happened, and with Jordan intercepting missiles over its own airspace. 5 projectiles landed within Israel's borders and 1 wounding a 7-year-old girl. The expected reaction in markets to the Iran-Israel situation was not happening. Oil was down, bonds are down, stocks are up. It sounds like de-escalation is the story markets are focusing on. The White House is telling Israel not to retaliate. The week ahead will have some important housing data, but little that should move the bond market. Earnings season begins in earnest this week, as will also quite a bit of Fed speak. We have a whole bunch of those guys talking this week. Another merger is happening in the mortgage space. CMG Financial is buying Norcom's retail assets. Norcom will continue to exist as a wholesale lender. There are 2 kinds of repricing to consider when you're a mortgage market professional: the intraday change in rates among lenders when markets move enough, and the broader bond market shifting in gears in response to some relatively rapid realization. Today's trading session spoke more to the latter, adding emphasis to a repricing that's been underway for the entire month of April. If there's one culprit, it's economic data. The jobs report and CPI are the 2 obvious all-stars, but today's retail sales report made a strong case on the starting lineup. At the end of the day, UMBS were down 40 basis points on the day. The 10-year closed out at 4.608, so ending the day at 99.36. That is putting us down this ugly range where we have a floor of a Fibonacci at 99.196 and a ceiling at 99.647, and we really need to get some news to break us up into that ground.